Chris, we're talking in advance of NVIDIA's earnings report tonight. Last week, we talked about earnings beat rates and sales beat rates, and yet there's talk about valuations being high or frothy in this market. What say you?
Look, this first chart is a chart from the last 25 years of operating profit margins for the S&P 500. They are at their highest level. Hat tip Charlie Bolello for this chart. They're at their highest level in 25 years. Okay. Look, what do you do when you have better margins? That means your sales versus your earnings numbers all look better, right? It means you're being a better steward of your cash. Right. It's what it means, okay, in your business. Here, next chart, Apple's buybacks in the last 10 years. What did they do that with? Cash, their operating margin. That's the answer to the question. They've bought back $90.7 billion of their stock in the last 10 years. Wow. If that buyback money was a stock valued on the S&P 500, it would be the 114th stock in the S&P 500, which means 386 stocks would be smaller than that in the S&P. And that's just their buyback
That's
money.
what they've bought
okay?
back.
You can see 3M's 114th. The point is, look, corporations are more profitable. If they're more profitable, that means there's more money to do things with, like buy back stock.
Yeah, or it just gives them the flexibility to do, smart business decisions because they've created the margins.
Yes.
That they aren't running on thin margins.
So look at this next chart. I mean, I realize a lot hinges on NVIDIA. And, if NVIDIA goes down, the market will go down. Okay, fine. It's the largest stock in the S&P. That's fine. Well, here are all the equal weight stocks year to date. This is the equal weight NASDAQ 100, equal weight Dow 30, equal weight S&P 500. All of them are positive. Now, you can see they've kind of tailed off a little bit in the last week or so. Okay, fine. But they're all positive, which means the average company's doing pretty well in the S&P, probably because of sales beat rates, probably because of higher operating margins. So look, at the end of the day, there's nothing to get too terribly excited about. Things are pretty good out there. And finally, going back to an update of a chart, again, hat tip to our friends at Bespoke, comparing the 90s.com time period to the AI time period. I mean, if you think the red line is now, the blue line was then, it looks pretty similar. And this is through, I think, like November 9th. I mean, at the end of the day, nothing's out of whack here.